Everyone, I'm Sarah. I decided to do two restaurants for my company comparisons for my annual report. I chose Domino's and I chose Cracker Barrel. The first thing I'm going to talk about is what an annual report is. An annual report is a comprehensive report of a company's activities throughout the year. They are intended for shareholders or intended for people like us to look at them and to see what their company's activities and financial performance is throughout the year. The first thing is the start differences that I'm going to talk about, and I chose working capital, which working capital is a measure of both companies' efficiency and its short-term financial health. Cracker Barrel had a $18,249,000 and Domino's had a $76,769,000. Domino's has a larger capital, so it would be easier for Domino's to pay off debt. The current ratios for Cracker Barrel is a 1.05 and for Domino's is a 1.33. Keep in mind, anything below a 1 would be in the negative capital. Domino's is pretty close, but they're not quite there yet. With that being said, Cracker Barrel has a less current asset to pay off credits compared to Domino's. My second stark differences was the inventory turnover. I was really surprised by this one because I really thought that Cracker Barrel had a really good inventory turnover compared to Domino's, but I'm assuming, I guess, because Domino's doesn't have that much inventory to actually turn over. Cracker Barrel was at a 5.81 and Domino's was at a 38.11. Keep in mind, the lower the ratio, which is too much inventory, and low sales, which Domino's is moving their inventory pretty fast. Domino's isn't moving theirs, which is really bad because products tend to deteriorate over time. Okay, and next then I'm going to talk about the similarities between my companies, which I really didn't have many, but I did the best I could at comparing them. The first one I chose was the price-earning ratio. Cracker Barrel had a 25.08 and Domino's had a 33.51, which means investors are expecting Domino's to do better than Cracker Barrel. Investors are willing to pay $25 per $1 earning that they will get back for Cracker Barrel and $33 per $1 on Domino's. My main similarity between the companies is that basically the investors see potential growth in both companies. My second similarity I chose was ratio of fixed assets to long-term liabilities. Cracker Barrel is at a 1.56 and Domino's is at a 0.01. Fixed assets are basically just represents a percentage of the company assets that are financed by long-term obligations and company's ability to meet outstanding loans. Moving on to my third one, I chose rate earned on total assets. Cracker Barrel was at a 0.0108 and Domino's was at a 0.44608. Rate earned on total assets gives a percentage of how profitable the company is relative to its total assets. This is important to management because management basically just it shows their allocations and resources on making more profit for the whole company. Both of my companies use the indirect method. So, and I think that's it. I've